Mintos has recently updated its Invest and Access, which promises more choice for investors. But is it as good as Mintos claims, or is it just another way to let investors invest in low-quality loans? My name is Jakub from P2P Empire, and in this video we will have a look at the new Mintos Invest and Access to find out whether you should give it a try or rather stay away from it. The old Mintos Invest and Access was a tool that diversified your investment across all loans with a buyback guarantee. The tool promised fast liquidity, and it was often compared to Bondora's Go and Grow. The problem with this tool was that it invested in lending companies which you would likely not invest if you would have used the classic auto invest and would conduct at least some basic research of lenders. New investors would think that it's okay to invest in all lenders since the loans are protected by a buyback guarantee. Well, if you have been investing on Mintos for 3 years as I am, you know that the buyback guarantee does mean a lot on Mintos, and that some lenders just decide themselves whether they pay back the money or not. Mintos suspended 12 lenders this year. If you have used the Invest and Access, chances are that you have invested in some of those. The thing is, after a lender gets suspended, you are not able to sell your investments on the secondary market. The result? According to Mintos statistics, there is over 55 million of investors' money in recovery, meaning Mintos will try to recover at least some parts of it. We have witnessed another reality check in March when investors started liquidating their investments. Mintos promised fast liquidity, meaning you can access your investments within a few hours. If you have read the fine print, you know that this is only possible if other investors invest and access will buy your claims. Basically, your loans need to be repurchased by others in order for you to exit your investments. Well, since most of the investors paused their Invest and Access in March, most of your money was likely unavailable for cash out. If you were quick, you could have sold your investments on the secondary market. That's at least what I have done with the rest of junk loans from lenders that were not yet suspended back at the beginning of June. So by now, you know that Mintos' buyback guarantee does not always work, and their promise of fast liquidity doesn't work either, unless you sell your portfolio on the secondary market. Is the new Mintos Invest and Access going to solve those issues? Let's have a look. The new Invest and Access was restructured. There are now 4 main investment strategies: the diversified strategy, the conservative strategy, high yield strategy, and a custom strategy, which is where you are able to find the old good auto invest. So let's have a look at every strategy. The diversified strategy is basically the old Invest and Access with some small tweaks. You invest your money in all loans from lenders, while the exposure in one lender is kept at maximum 15%. You invest also in loans without the buyback guarantee, which was not the case with the old Invest and Access. Mintos promises instant access to your money under normal market conditions, which is not further defined. This means that unless someone else is interested in your loans, you won't be able to cash out directly with the Invest and Access, but you need to rely on the secondary market to liquidate your portfolio. The diversified strategy promises an average interest of 12.25%, which I found highly misleading considering the latest events on Mintos and the ongoing suspension of lenders. The conservative strategy offers a slightly lower average interest of 9.24%. You will invest in loans with a buyback guarantee from lenders that have at least 80% of their portfolio current and maximum 10% in pending payments. The exposure in one lender is also kept at 15%, which I find still too high. While the ratios that Mintos added to the strategy are a positive improvement, your money will still be invested in lenders that have a rating between A+ and B-, which makes this conservative strategy very risky. Lenders such as Capital Service, Kviku, Express Credit, and Cashwagon had all ratings between B+ and B- before they got suspended and investors' money was locked. So according to Mintos, if you invest in lenders with those ratings, you will follow a conservative strategy, which I find quite ironic. Now let's move to the high yield strategy, which promises returns of 12.6% and prioritizes top 60 interest rate loans on the platform. This strategy should be called high loss instead, as this strategy also invests in lenders with a C- rating, according to Mintos' description. Why would someone voluntarily invest in lenders rated with a C- is a mystery to me. All the new strategies will have investment limits depending on your investment size. That's also an improvement from the old Invest and Access, where the tool also invested amounts of more than €100 in a single loan. The only way you should consider investing on Mintos is by using a custom automated strategy, which is now very well hidden. Personally, I have exited most of my investments on Mintos because the marketplace fails to inform investors about up-to-date information which I can use to make up my investment choices. The Mintos ratings are dangerously misleading for any newbie that starts investing in P2P loans. If you absolutely insist on investing on Mintos, do in-depth due diligence of A-rated lenders and decide for yourself whether it's worth the risk. As for myself, there are better Mintos alternatives at the moment which yield better results, which is the main reason why I don't want to spend time researching every lender and hoping that the loans will be repaid. You can have a look at our website p2pempire.com to learn more about the currently better Mintos alternatives. Now, some investors say that if Mintos starts getting bad reputation, all the P2P lending market will collapse. I like to believe otherwise. Surely, other P2P marketplaces that offer loans from the same lenders as Mintos won't be as attractive as they can't offer much better deals. But there are also marketplaces that list just a few exclusive lenders which you won't find elsewhere. P2P lending sites like Kviku, Invest or Neo Finance are also good alternatives if you want to stick to investing in consumer loans. Then there is also the possibility to invest into mortgage-backed loans on Estate Guru, where none of the investors ever lost any money. Mintos was my first P2P investment platform when I started investing 3 years ago, and it was the best at the time. As more investors kept joining, Mintos had to adapt, onboard new lenders and create tools for investors who were looking for easy investment opportunities. Mintos is making it very clear that it's just a broker and nothing more. It's not reliable for your losses, but it should be reliable at least for the proper monitoring of lenders, which despite the pandemic, Mintos failed in my opinion. Instead of fixing the calculations of the Mintos ratings, the platform pushes updates like the option to share your referral code via the app, or now these new investment strategies, which at the end of the day don't make your investments more secure. Mintos is developing the platform to appeal to the masses. The introduced fee for the secondary market transactions, as well as now the fees for legal actions against lenders, are making investing on Mintos more expensive. It's up to you to decide how to invest your money. Personally, Mintos isn't the right platform for me anymore. I wish Mintos would be more transparent with the way they communicate new features, as I find it misleading at best. Maybe if more investors would bring this up, we could see finally some positive improvements. So this was my personal opinion about the latest developments on Mintos. Let me know your thoughts about Mintos in the comment section below. If you like this video, give it a thumbs up and subscribe to this channel to not miss any future videos. Thanks for watching, and I will catch you in the next one.